Morning, guys. It's Wednesday, July 23rd, 5:24 a.m. Central Time. Grain markets are a little bit higher this morning. December corn futures up 1 at 419. November soybeans up 7 3/4 at 1033 1/4. December Chicago wheat up 1 3/4 at 571 1/4. December Kansas City wheat up 2 cents at 557. December spring wheat up 3/4 of a cent at 612 1/2. It looks as if we've got a trade deal with Japan. Why don't we start there?
Yep. So President Trump announced a new trade agreement with Japan late Tuesday. The deal imposes a 15% tariff on Japanese imports and includes a commitment from Japan to invest $550 billion in the U.S. Trump will have the discretion to direct how the investment is allocated, with a portion to be provided through loan guarantees. Japan has agreed to expand market access for U.S. automobiles, rice, and other agricultural goods. This includes a 75% increase in rice purchases and an additional $8 billion in imports of agricultural and related products. Japan remains a key buyer of U.S. agricultural commodities, including corn, soybeans, and wheat. Also on Tuesday, Trump unveiled a trade deal with the Philippines, imposing a 19% tariff on its exports to the U.S.
Japan had some problems with the tariffs. Their exports really fell sharply. Revenues from auto exports fell 26% following the tariff imposition. Pharmaceuticals down by as much as 40%. The Bank of Japan showed a whole bunch of negative sentiment. Manufacturers' confidence fell sharply during the tariff war, whatever you want to call it. So this is good, I guess. And again, we've seen purchase agreements announced or included as it relates to ag products. So now you've got, I think, 3 of the trade deals included purchase agreements. Indonesia included purchase agreements, Bangladesh, and now Japan. And maybe there's another one, but I think those 3. Japan, as it relates to imports of U.S. products, they are the second largest buyer of U.S. corn, and they have been during this current marketing year, 18.6% of all U.S. corn sales. So we need them to stick around. I don't personally think the trade ever really thought they were going anywhere as it relates to corn in the United States. I don't think that fear was really out there, but this perhaps solidifies them as a corn buyer. Soybeans, Japan is the 5th largest buyer of U.S. soybeans this year, only 4% of all export sales, but still noteworthy. And as it relates to wheat, they have been the 4th largest buyer of U.S. wheat this marketing year, and this is very early in the marketing year. Now, when it comes to total domestic consumption overall, Japan barely cracks the top 10 in corn. They do not crack the top 10 in terms of domestic consumption of wheat or soybeans. I don't know that they're enough to move the needle. As I've mentioned with the other trade deals, the deal that we need to see and the purchase agreements that we need to see is China, and that one is still missing. So this is good news. We've got a piece regarding China here coming up in a couple stories.
Corn sweat is intensifying this week's extreme heat across the eastern half of the U.S. A heat dome is driving excessive heat and humidity across regions east of the Rockies, impacting nearly 85 million Americans. Heat warnings and advisories stretch from Florida and Louisiana to as far north as Chicago. In agricultural areas, elevated humidity levels are being further amplified by corn sweat, which is a result of evapotranspiration from crops. While it's not the primary cause of the heat, the phenomenon can significantly increase local humidity. Its impact is currently at its peak, coinciding with the corn crop's tasseling and pollination stage.
I think corn sweat has turned into a buzzword that the news outlets run with like every year. It's just an interesting story. The forecast has shifted a little bit. Here's our friend's Crop Profit on X or Twitter, whatever you're calling it, yesterday. All 3 14-day average temperature forecasts, the Euro, GFS Ensemble, the AI, FS, they're all trended cooler since yesterday. So the forecasts have trended cooler. And this heat wave, while it will exist here for another week, it looks like we're going to run temperatures well above normal through, call it like the middle part of next week, maybe Tuesday, Wednesday, on average over the next 7 days, according to GFS Ensemble data. Our friends at Crop Profit estimate that we'll be 6.2 degrees above normal. So you got some heat here for a week, but then the heat subsides and a lot of areas of the Corn Belt may run into cooler than normal temperatures during the 8 to 14 day period, the way that it looks. So there has been a little bit of a shift in the forecast. Still, my concern as it relates to the crop would be the warm temperatures that we've already seen. We had those maps a couple days ago about the overnight low temperatures and how they've been historically warm throughout the central and eastern corn belt. And that, of course, is going to persist for another week. So what does that mean for the corn crop? I don't know. Rainfall is going to be normal to above normal the way that it looks. You've got this kind of heat ridge or dome in place for another couple days, and then you're going to see some rain. And there's been some rain that's broken through this thing. And 8 to 14 day rainfall looks fairly normalish as well. That kind of yellowish brown stuff in Illinois and Iowa, I mean, you're talking 75-80% of normal rainfall, so it's not enough to sound the alarm by any means. There's still a lot of the crop's in good shape the way it sounds, but there are a lot of questions regarding perhaps excessive rainfall, perhaps the overnight low temperatures. I know there's been some pollination issues floating around, but ratings are still good, and the market still seems to believe that the crop is very, very large.
Lower expectations for Russia's wheat harvest and exports pushed wheat futures higher yesterday. The December 25 SRW contract rose about 6 cents to settle near 570 per bushel, while the December HRW contract gained about 7 cents, settling at 555 per bushel. Spring wheat also moved higher, with the December 25 contract up 3 cents to finish near 612 per bushel. Along with Russia's downgraded outlook, Ukraine is also projecting a smaller wheat crop. There are also concerns about drought conditions in Canada, which could further constrain global wheat supplies.
A little bit of a bounce, but the market really sucks. That's my analysis, and that's my technical analysis. I have a similar technical analysis, I guess, when it comes to soybeans and corn. But wheat's been it's really struggled. You'll see these little rallies, or you bounce 20, 30 cents, and then they just go right back down. Spring wheat's acted especially poorly because we've seen some weather improvements and some rain. So the market is we're very much still in bear market territory here.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
We had some actual technical analysis yesterday. Brian Split was on what will spark a rebound for soybeans. Brian is fantastic with charts. He's the best in the business as it relates to the grain markets and probably a lot of other stuff. You should listen to what he has to say about charts. Chris Barron was on earlier this week, early look at 26 corn and soybean budgets. We talked a little bit about marketing. We talked about the average sale price for Chris's customers, what the budgets are going to look like for 26. And it's early. We've still got a lot of kind of things that are missing, but you got to start somewhere. And this is where we're starting. Chris also made a free budgeting tool available. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. We send out a ton of content to our premium subscribers every single business day. Our morning email goes out at 5 a.m. Central Time every single business day. Our midday video blast goes out at 10 a.m. Central Time. The premium videos are fantastic. We've got great contributors. This is what helps us to stay afloat here. As I've mentioned many, many times, YouTube pays us enough to basically keep the lights on, but we lose a ton of money doing this morning show every day. The premium subs are what keep us alive. If you're a premium sub, we love you to death. If you're not, give that deal a shot.
Coca-Cola plans to begin using cane sugar in its U.S. beverage lineup. The announcement comes a week after President Trump praised the company on Truth Social for shifting away from high fructose corn syrup. While Coca-Cola is unlikely to eliminate corn syrup entirely, it is expected to launch a new pricier product made with cane sugar. The move is part of the Trump administration's broader push to reduce processed ingredients in the American food and beverage supply. Approximately 410 million bushels of corn were used in the production of high fructose corn syrup back in 2023, accounting for about 2.8% of total corn demand.
I think this is a non-story. So Coke is going to essentially appease Trump with a new product launch, but it sounds to me as if it's very unlikely that they actually replace any of the existing high fructose corn syrup products. I think it's a non-story. I think that this was a publicity thing for Trump. I don't know that it's going to change corn demand in any way, shape, or form.
The Trump administration will likely extend the current trade truce with China, as Treasury Secretary Scott Bessent is set to meet with his Chinese counterparts in Sweden next week to discuss extending the 90-day tariff suspension agreed to back in May. The suspension was initially set to expire on August 12th. According to Bessent, trade with China is in a very good place, and he expects next week's talks to be constructive. In addition to trade, Bessent hopes to encourage China's potential shift toward a consumer-driven economy. He also plans to raise concerns about China's oil imports from Russia and Iran, as well as its support for Russia's war in Ukraine.
We do need a trade deal with China. We'd like to see it. They have the ability to buy a lot of ag products from us, corn, soybeans, wheat, whatever. They have the ability and the consumption and the people to consume those things. So as it relates to soybeans, which is that's the big ag product that they buy from us, China was the largest buyer of U.S. soybeans during this current marketing year, which is going to end at the end of August, head and shoulders above everybody else. China has not bought any soybeans officially for new crop delivery, but that's the same place that they were at this time last year. So people look at soybeans and they look at the marketplace and they say, this is Trump's fault. And I don't necessarily know that that's the case just yet, because last year Trump wasn't in office and China still hadn't bought any U.S. soybeans. A lot of what China does just comes down to pricing. Are they able to buy U.S. soybeans cheap? And does it make sense for them to do it based on their needs seasonally and that sort of thing? And seasonally, they just don't buy a lot of soybeans from the United States this time of year. Brazil's cheaper. It makes more sense. Typically, they will start buying new crop soybeans, soybeans for new crop delivery around this time of year, and they'll start to import a lot of U.S. soybeans post-harvest. And if that doesn't happen because of trade tensions, then you can probably say, yeah, it's Trump's fault. But I think when and if U.S. soybeans are competitive for new crop delivery, China is going to come in and buy them the way that they typically do. If I had to make a prediction, I would say, and this is not a bold prediction by any means, China will be the largest buyer of U.S. soybeans during the new crop marketing year, which begins on August 31st. That would be my prediction as of right now.
Meme stock mania has returned. A new wave of retail trading madness is underway, comparable to that of 2021. But this time, the spotlight is on Open Door Technologies and Kohl's instead of GameStop and AMC. With equity markets hitting record highs and Bitcoin surging, retail investors are flocking to heavily shorted, low-priced stocks in pursuit of quick gains. However, unlike in 2021, traders are facing a more challenging backdrop with higher interest rates, the absence of stimulus checks, and a weaker job market. Despite these headwinds, enthusiasm remains strong, fueled by fear of missing out. Although some experts warn that this surge in speculative buying could be creating a bubble that is bound to burst.
There's a lot of money in the system. M2 money supply quietly creeping into all-time highs in May and again in June, above 22. I believe, is that a trillion? I think it's $1 trillion. So there's a lot of money in the system. And when you consider all of the asset classes that are at or near all-time highs, you've got the U.S. stock market, residential real estate, farmland, gold, Bitcoin, all of those things are at or within 5% of all-time highs. And there's a lot of other things also. So I think that this is a lot of this is just, general inflation, but also as it relates to the meme stock stuff. I mean, there's a lot of money in the system. M2 money supply consists of all the cash, checking deposits, which is M1, plus savings accounts, deposits under $100,000, retail money market mutual funds. Retail has a lot of cash, the way that it looks, and they're doing, I'm not going to call it stupid things, but they're doing things. Could be stupid. I don't know. What did cattle do yesterday?
Cattle futures were mostly higher. Live cattle were 50 cents lower to 60 cents higher. We actually saw feeders rise to new highs. Feeders saw gains ranging from 67 cents up to $1.37. Box beef prices were mixed. Choice was up 43 cents at $372.50, while Select was down to 11 at $347.94.
Stock market's higher again this morning. I believe the S&P posted a fresh all-time high again yesterday, and now we're higher again overnight. The Dow's up 220, the S&P's up 26. Treasury's off a little bit. U.S. dollar's about flat. Crude oil is down 43 cents, and the October WTI is 64.03. Have a great day, guys. We'll be back on Thursday